The webinar now, and assalamu alaikum, and good afternoon everybody from Dubai, and welcome to Ahmed Al Akbari Chartered Accountant e-learning series. Our today topic is UAE regulation and its applications on businesses. The recent introduction of regulations to document the business activities and transactions as per the international requirements are like AML, anti-money laundering, UBO, ultimate beneficiary owners, and ESR, economic substance regulation. These regulations are in place as per the international requirements in UAE, and UAE government have enforced this regulation and starting before it, in 2018, where it was introduced. If we talk about AML, anti-money laundering, around 5 directives have been issued by the EU in this, and the latest was in 10th of January 2020, AML 5. The estimated money, is laundered globally in 1 year is approximately 5% of global UDP, is around 2 trillion, equivalent to 2 trillion. Financial institutions who have not properly, addressed the regulation get heavy fine and penalties on that one. Today we'll be talking about this regulation, especially on AML. And our today's host will be Ahsan Talat. He is the manager in Ahmed Al Akbari Chartered Accountant, looking after DMCC branch. To you, Ahsan.
Thank you very much, Mr. Sayyid Asif Zaman. And I will introduce with all of the speakers today. We are here with Ms. Alia. She is director at Ahmed Al Akbari Chartered Accountants. We have Mr. Dallaram. He is also Chief Risk and Compliance Officer in the Mint Middle East Group. And he has good expertise in compliance and risk. And he is by profession ICAP Chartered Accountant, and as well as holding membership of ICAW. We also have Miss Eman. She is qualified lawyer, and she is working in Al Awad Al Aryani Advocates and Legal Consultancy, and she has experience of 17 years, and she is providing legal consultancy to many UAE in the UAE law and to expatriates as well. So the agenda of today's session is that we will run through with presentations on AML, ESR, and UBO requirements, which is the recent drift into the UE more organized laws and regulations. And Ms. Alia will start with it, then Mr. Dallaram, and then Ms. Aman. And then we will head towards the question and answer session. So you can leave your questions in the chat box as well. So one of the speakers will be answering to you shortly, and that's how we will proceed. So I would welcome now Ms. Alia Noor to start with the presentation on AM. Thank you. Over to you.
Thank you, Ahsan. Just to add on that, there will be a question answer session at the end of this all 3 sessions. But meanwhile, if somebody have questions, they can put on question and answers. There is an chat box for question and answer. They can write over here, and one of the experts will be answering, and we will taking some question answer end of all the 3's presentation. So back to you, Ms. Alia, please.
Ms. Alia Noor, can you hear us?
Thank you, Ahsan. Thank you, Sir Asif.
Ms. Alia, can you hear us? Because we cannot, your voice is not audible.
I think Alia will be joining again. Just wait for a moment.
Okay, I'm back. Can you hear me?
Yeah, we can hear you, but there is distraction in your side. I think the sound distraction. Anyhow, you can start that one and you can start the presentation.
Okay, thank you.
Alia, can you close the video? So I think make the presentation. It will be better. I think your internet problem.
Okay. Can you see the presentation? Can you see the presentation?
Yeah, we can see the presentation.
Yeah,
Please go ahead.
Hello. ठीक है. एक
Yes, Miss Alia, can start the presentation, please. Alia, can you start the presentation?
Yes, please. Okay, hi. Saying what is AML, anti-money laundering, what is UBO, and compliance to ESR in this session. Let's start with the basic. Is the process of making money from
Alia, can you check your internet? Let Dalaram start the presentation. You can do later on because there is an internet problem from your side. SM?
Yes, Mr. Dalaram, can you join us? Can you share your screen?
Alia, you can make later on, please.
So over to you, Mr. Dalaram, please.
Good afternoon, everyone. So let me share my presentation. So, Asim, my presentation is visible clearly?
Yes, it is clear. You can
Yes.
proceed.
Okay. So we are looking for the AML regulations and all other regulations like ESR and UBO. So I will be speaking mainly from the financial services perspective and what are the bodies, and then detailed definitions will be covered under Ms. Alia's presentation. She might be joining after in the next session. So the key bodies, supervisory bodies in UAE looking for a AML and financial services institutions are Central Bank of UAE, Securities and Brokerage Authority, SCA, Dubai Financial Services Authority, Abu Dhabi Global Market International Financial Center. So DIFC and ADGM is newly entered in the market of mainly digital banking, although the financial centers exist for now, and they are taking their regulations from FCA Financial Conduct Authority, and these are more stricter than some of other authorities like SCA and Central Bank of UAE. Now they are entering into a digital banking world where the importance of AML, risk management, and related regulations has further increased. So again, the international bodies like, as Mr. Asif mentioned, there are a lot of circulars and regulations keep coming in. Financial Action Task Force is one of the key body regulating in terms of the AML. and issue the rules, regulations, and which are keep changing, and all the authorities, other jurisdictions required to follow those requirements. Other international guidelines also issued by IMF, Basel, and Wolfsburg, which are kind of the guidelines and advices which we are considered as international best practices to be used for AML regime. Now, recent actions by CBU, this will show us the importance that how Central Bank of UAE is become more stricter towards the AML compliance, because it's mainly nowadays is a overall national reputation level. Recently, they have done a national risk assessment, and international organizations or OFAC and FATF might be putting UAE also in a grey list, for which they need to make sure the compliance with all the regulations. So if you can see, there's some extracts from the recent newspapers. 11 banks fined in UAE for 45 dirhams. UAE bank sanctioned our non-compliance. Central Bank of UAE fine an exchange house for compliance failure. This was around 504,000 dirhams, and 7 exchanges were suspended their license mainly to do exchange business. And surprisingly, you will see an individual was fined for 600,000 to misuse his authority or to not comply with the required regulations. Now, from the international side, of course, we keep hearing HSBC's shares goes down because of the non-compliance identified by the authorities. And in 2020 itself, 9.39 billion euro fines were put on financial service organizations, from which 3.3 billion were only for one organization, which is Goldman Sachs. Then Commerzbank fine also 37.8 million. So this shows us how regulators are keen to make sure that AML laws are being compliant, and all authorities are also following up on that. So how to avoid the non-compliance? Some of the key steps and processes. First of all, appointment of authorized compliance officer and AMLRO. Though generally organizations need to appoint a compliance officer for financial institutions, Central Bank of UAE's authorization is also required. In most of the cases, Central Bank of UAE team personally interview the candidate before he can be appointed as a compliance officer or AMLRO. These two can be different positions or a single position depending on the quantum of the organization and how much is the volume of the organization. The second step is a risk assessment, as there can't be the possibility of reviewing all of the transactions and applying the same level of checks for all customers. So organizations need to have a robust risk assessment initially at the organization level to identify the key risk areas, products, and then secondly at individual customer level, which could be high risk. In the next slide, we will look in further detail for that. Then of course, internal controls framework, governance, policies, procedures, that high level controls will surely help the organization to detect any AML activities or suspicious transactions which are required to be reported. Then know your customer and CDD procedures, relationship and transaction monitoring. After customer has been onboarded, it requires to be monitored on a continuous basis. It's not a one-time process, it's an ongoing process. Identification and reporting of suspicious transactions through a GoML. We will discuss this in the next slides. Independent audit of AML program. So any organization, if they want to make sure that their AML program is working fine, they need to have a third-party assessment for their internal quality assurance purposes. However, most recently in 2020, Central Bank of UAE has issued a circular with a full scope to all of the financial institutions to have a mandatory third-party certificate on AML program. According to that, all financial institutions in UAE, including exchanges, finance companies, banks, insurance companies, has been rated high risk or low risk from AML perspective. and warnings or deadlines were given to them to comply wherever there were the weaknesses. Training and awareness, so it's a regular requirement because of frequent changes in the international and local regulations. Frequent trainings and awareness is required. So non-compliance of any of these steps can lead us to fines or even suspension of license. And it should be noted that all the banks which has been fined were not fined because they were involved in the money laundering, but mainly because the central banks has found their processes and controls are significantly weak to detect AML or money laundering transactions. So in terms of the risk assessment, as I mentioned, the first step is the customer type at an organization level. What type of customers we are dealing with, what is our target marking, big corporates, retails, SMEs, which particular industries that can change our risk profile, and individual customer level, their identity, nationality, and their source of income would be important. Secondly, type of products organization is offering. Some products may be very high risk, prone to money laundering, and some products will have a lower risk, such like if there's an insurance policy with very lower premium and no cash withdraw option in that. If early termination option is there and there's a huge money, then it becomes a high risk product. Now, of course, delivery channels, if the organization is dealing mainly in a cash transfers through bank statement, is the organization accepting third-party transfer or international transfer? So these factors needs to be considered in our risk assessment. And geographical locations, whether the organization is dealing locally only with local customers or internationally to international customers, or the customers which maybe have a local presence, whether they are restricted to the local business or they are also dealing internationally, like import export organizations are always put under a high risk under the Basel requirements. Now, for know your customer in relation to individuals and also companies, the key requirements or key steps would be, first of all, identify their, based on the documents, their name, nationality should be evidence from the documentary proof. Identify the beneficial owners of the company. It is trending now. Ministry of Finance has already started to report all beneficial owners, but for the banks, the requirement is already there, which banks needs to be assessed. We will further discuss that how UBO is impacting banks and how it will help banks to meet this requirement. Verifying the source of funds, whether it's a salary, business profits, and accordingly supporting documents need to be verified to ensure the funds are from the legitimate sources. Understanding nature of customers' business and customer behavior. So customer behavior plays very important part in the guidelines, because sometimes you can see all the documentary evidence is perfect and fine, but if the customer is fishy, for example, trying to hide something, trying to do hurry and trying to not reveal certain information, that could be a trigger point for a customer front officer to look for further documents and try to verify. Nature of the business, as I mentioned, if it's a retail business, it may be more cash transactions, and if it's some business with a wholesale or the banking transaction, that will have a high risk. So understanding the profile will ensure that bank is able to identify any suspicious transactions or unusual transactions. Customer screening, customer sanction screening is required via our key lists, OFAC list, UN sanction lists, and other lists. So mostly in a digitalized world, there is automatic softwares available which can link with your core banking software or key accounting software to screen those customers against those lists and blacklists. UACBUE also issues blacklists and freeze of accounts on weekly basis, or as it comes. There is no specific time period, so organizations need to keep themselves updated on that. Finally, there are additional requirements such as FATCA, which is related to Foreign Account Tax Authority, and CRS Common Reporting Standards. If there's any links identified during the KYC, as the customer has the links with the US organizations, then there are additional requirements of WB9 form and other forms to provide that information to the regulatory bodies. Now, as I mentioned, for individual customer level, the important factors are nationality, customer type, customer business, level of transaction, source of income, and PEP if the customer is a politically exposed person. In case of organizations, again, the ultimate beneficial owner, if he is a PEP, then it could be treated as a high risk, because shell companies or creating a business entities is being remain very common practice for high level persons to hide their illegitimate funds. So customers can be classified low risk, medium risk, high risk, or very high risk depending on the parameters and assessment of the parameters which we reviewed. Once customer is triggered as a high risk, then enhanced due diligence is required, means you need more additional proofs of their funds, and of course for the business, and more frequent KYC updates and monitoring of transactions is required for high risk customers. And that is all should be part of our AML program. Coming back to fines, so in case non-compliance with any of those regulations or not following the process can lead us to fines, imprisonment, cancellation of business license, financial investigations, sanctions, and mainly I'll say block of funds and block on assets. Not only the designated persons like financial institutions and non-financial designated persons, but also anyone who is using those gatekeepers, because those are our gatekeepers through which we do our day-to-day transactions. I'll give you a simple example that recently an import-export business person who might not be aware of full AML requirements and documentation has exported some goods in the US, and when the US company tried to send the funds, it was blocked by the US bank because of some of the necessary document missing and source of income requirements. So before selling goods or expecting payment from other customers, normal businesses need to make sure that they are complying with certain requirements, otherwise they could be face delay in funds or blocking of their funds. Even in one of another recent example with pass through, one of the landlords in UAE rented his property to expat, and expat was new in UAE. So he preferred to transfer the money directly from international bank account. The landlord, not knowing much of this AML and problematic requirements, he accepted the transaction. But what happens when the transaction was initiated from the bank in another country that was blocked by the banks for asking additional documents and things, which took more than 1 week to blocking of funds and delayed. And again, when the transaction received by an individual in its account, then the receipt side bank in UAE blocked the funds and they take the customer as high risk. So customer was called not only to explain that particular transaction, but also the customer has other businesses. They have asked them to reveal all the information and further enhance due diligence for the businesses and accounts being maintained. So this is how it could be important, even non-gatekeepers or where GoML is not applicable as a normal individual or business. So as it is being in discussion since long time now, all financial institutions are already part of the GoML. All designated non-financial business and professionals has been given a deadline of 31st March by Ministry of Finance. But one of the important factor here that some people have a concern that once they will do registration, their obligation is over. So no, that is actually the start of the obligation. Once the registration is done, that is a point from where all the requirements related to AML process and STR reporting becomes valid for them. It's similar to our weight implementation. Weight registration is the start of the phase. Then any weaknesses, because they are then under monitoring and under database, and any weaknesses and non-reporting can also attract the fines. Probably Central Bank of UAE and Ministry of Finance is going to make the processes more stricter or enhance their monitoring on non-financial businesses as well. Now, what is a GoML? Just a quick, that GoML is a centralized system developed by UN Drugs and Crime Authority, and this helps not only on international bodies but even the local regulators and financial investigation units to get a centralized data, because sometimes a single transaction, even you report suspicious, you may think, oh, this is a very common. But in a centralized system, when the similar level of transactions, let's say they receive the 10 transactions from different banks and different organizations, they join these transactions and trends to do analysis on the adequacy and materiality of. Because sometimes people think, okay, the transaction I am reporting is suspicious, is immaterial, but we are not looking in the overall context that maybe a person is doing a similar, let's say I'm doing 40,000 transactions, 10 different banks using the same methods to avoid AML detection. But the centralized system will combine using the IDs and everything to understand the overall quantum of the transactions being done by a particular person or organization. Now, key red flags which banks look, and of course now non-banking designated persons also will have to keep it in mind. These are very high level. There could be the hundreds of those, but key trending one, complex structure with no business rationale. Some organizations, to avoid the tax on other, you will see the sister company, holding company, company's name of the spouse, multiple companies having the same business with the no business rationale. That what is the need of having 4 companies, though it can be done business with the single company, all in different jurisdictions. Reluctance to reveal required identity information. Again, as I mentioned, customer behavior, and some customers say, oh, it's confidential. Oh, why I can't give you. So in those cases, there could be the possibility or suspicion. It's not mandatory money laundering, but it raises a suspicion. Then again, it needs to be considered, including all other factors, product, customer risk, and all. Transactions with no business rationale. I'm purchasing selling a property, let's say in a 1 million dirham, and current market value is 2 million dirham. Now, if as a real estate agent is in that deal, he should raise a suspicion that why the person is happy to sell the property 1 million. So there may be the internal arrangement of some fund transfer approach from international funds and everything. Transactions not in line with the usual business activity. A retail customer who never deal with import export suddenly brings a deal of the import of something. Avoiding official channels of money transfers. A lot of people bring, okay, I want to pay cash. So that could be a problem if we don't know from where that cash is coming from. And that designated persons need to be aware of that and ask for a source of income or proof of funds. Use of shell banks, shell companies, and nominee persons is prohibited, but still it is used, especially in an international environment and some of the local environments. Dealing with high-risk sanctioned countries or person. Again, so if any of your customers are dealing with high risk or sanctioned countries, that could create a risk for an organization. When talking about a lot of people is always this doubt that if a person is from the high risk country and living in UAE, is it prohibited to deal with it? For example, one of the area of Sudan is a sanctioned country. A person from Sudan is living in UAE and coming to open a bank account and do any transaction. Normally, it is always captured as a high risk, but we cannot prohibit him to open an account with the bank or do any transaction. Keeping it in high risk means we need to make sure that the funds or the business which is doing has no links with the sanctioned part of the world or any of the transactions. So it's just for the sake of the high monitoring, but it doesn't prohibit to enter into transaction unless we have a reasonable proof that there's involvement of any suspicious or money laundering transaction. So tipping off attracts fines up to 500,000, 6-month imprisonment, and of course sanctions. So customers should not know that we have raised STR under the OML or any investigation has been started against it. So if we are customers ourselves and not part of the gatekeepers, so we should be also careful that sometimes we say, oh, I did this transaction, nobody asked me anything. So maybe nobody is asking you anything, but the information has already reached to FIU unit, which will start investigation and may ask to block the funds depending on the, again, the severity of the incidents. Going to next slide, there is a lot of digital transformation happening and now digital banking, which has also increased the risk of AML. You say now there is limited or no face-to-face interactions for a customer's onboarding. However, the regulators all over the world and the tech companies are initiating new softwares and digital softwares like in the UAE, it's linking with Emirates ID Authority, CBUE, AECB, sanctioned database. So international databases are being linked together so it can be fast process. Artificial intelligence softwares who can detect the behavior and customer transaction pattern to highlight unusual transfers. Accordingly, if you have seen that UAE has 2030 digital strategy, according to which all the digital documentation is part of that initiative, UAE Pass, UBO and ESR, which will be centralized documentation. So whenever then a customer needs to be used digital banking services, it can be connected online through all databases to verify the customer. In addition to fingerprints and face detection technology is already in process, which is being there for a lot of softwares to verify the identity and any AML risk under the digital banking world. So training and record keepings, all the employees, board, senior manager, everybody should be trained on AML rules, especially the customers, which are our main frontiers and dealing with the customers. Those employees has key importance. Then according to the involvement of all staff with the customers, there should be the different level of trainings. For example, board may not require same details is our salesperson who is directly dealing with the customers. Record keeping, all the organizations are required to keep records at least for 5 years after the cessation of relationship and not start of the relationship. After the relationship has been ended, 5 years data should be there, and it can be customer, it can be our staff or any other business partner which is dealing with us and onboarded with the organization. Again, ultimate beneficial ownership, as I mentioned, the Ministry of Finance has already issued the regulations and some details will be explained by Ms. Alia, my colleague. From the bank's perspective, now this will provide a centralized data source to banks to automate to get the details of ultimate beneficial owners and also to cross-check if the information submitted does not tally with the information submitted by the customers. So that will really help and fasten the process. Normally, as per Central Bank of UAE regulations, a person saving 25% or more beneficial interest shall be analyzed as a key beneficiaries. In another jurisdictions, especially I believe in FC or other, it starts from the 10%. So depending on the jurisdiction risk and local regulatory authorities regulations, that can be different requirements. 25% is at the moment for UAE. And beneficial interest doesn't mean shareholder by any way. A person who is influencing the business, have a directorship or taking a parts in the profits, he is considered to be a beneficial interest in the organization. Now, coming back to ESR, ESR is also applied on 9 activities. When we say banking, actually there is a very detailed definition for that. It's not necessary to be a banking license. Like any entity who's accepting deposit or client monies or funds will fall under the banking activity. That's why the word is mentioned as activities and not as a bank. So there is a requirement of robust ESR test under the all of the 9 categories to ensure that your organization must or might be involved in any of the activities from mentioned here. So, all gross income from a relevant activity that is recorded is considered under ESR reporting, whether earned inside or outside UAE, and irrespective whether the entity driving any profits or not. For example, there may be the organization who is keeping some client monies just for not their profit but for other activity as a trustee or like a brokerage company. Still they will have to consider this under the deposit activities. Now, filing requirements, typically if entity is carrying relevant activity, no, then of course no action is required. If entity is carrying relevant activity but doesn't drive any income, still notification is required to Ministry of Finance that no income is being generated. If some income is being generated, we'll have to see whether the entity is exempt because certain categories or maybe the special exemptions are there. So that doesn't require to do any action. However, in other case, the entity required to do additional ESR test and ESR report to be submitted to Ministry of Finance, which should be within 6 months of the end of financial year. Consequences of non-complying with the ESR. So there is a revised set of the penalties. So failure to submit notification, 20,000 dirhams. Failure to submit ESR report, 50,000 for first year and 400,000 for second year. And I believe this is the big money for any business. In case of the little violation can lead to business interruption. And penalty for providing inaccurate information is 50,000. Thank you. If I know in this little time, this was a very high level overview, and you might have so many more questions on this. So until we are here, we will welcome any questions through a chat box and at the end of the session. But you can keep in touch with me or any person from Ahmed Al Akbari even after the session, and anytime you need any consultation, we will be happy to help and go through with you on the further details and your business requirements.
Thank you very much, Mr. Dalaram. And Mr. Dalaram is working with us and an advisor at Ahmed Al Akbari Chartered Accountant. Previously, he was, Chief Risk Officer with the Afaq Islamic Finance, and he was this head of Director Risk Management with Abu Dhabi, First Abu Dhabi Bank. So he had a wide experience of compliance and risk management and all these things. Now back to you, Asif.
Thank you very much, Mr. Dalaram. Now I will invite Miss Alia to share her slides and go through with his AML guidelines.
Well, hello again. Can you hear me?
Yes.
Yes. Sorry for the inconvenience. I had some internet connection problem. Okay, now Mr. Dalaram has explained you everything technically very easily and very conveniently. I hope you would have understood everything. Now the question is why you have to do everything, the compliance, and what is the secret recipe of compliance of all these three regulations? The secret recipe is consistency of providing information. And why you? Now let's start. What is money laundering? Money laundering is the process of making money from illegal sources and appearing to have a legitimate source for such money in order to avoid regulatory scrutiny, typically by transferring it through a series of legitimate businesses. This person, Al Capone, he was the American Italian mafia criminal, and he was the one who introduced the term money laundering. And he was so intelligent that he was the cover page of Time magazine because he has a brilliant mind. Why? Because he allegedly purchased laundromats to mix their illegal profits from prostitution, bootleg, liquor sales with legitimate sales from laundromats to obscure the illegal profit. So his dirty money was mixed with clean money and it was a clean money. Another terminology which is included in money laundering is terrorist financing. But you are not a terrorist, so why? You are included to report because terrorist financing is the financing of any terrorist act or terrorist organization or dealing or entering into transaction with a terrorist, which often includes money laundering. And you could be in any of the stage. How? These by raising fund, donation, self-funding, criminal activity, transferring fund to terrorist network, wire transfer, cash smuggling, cars, havaldars, using those funds to purchase weapons, bomb making equipment, covering living expenses for a terrorist. You are not doing that. Have you heard about money mule? What is a money mule? This is a terminology where people ask you, we will transfer certain amount of money in your account and you have to keep certain percentage and then transfer that amount to certain person. This is a money laundering crime and you are a mule, money mule. So there are three stages of money laundering cycle. If you are able to understand this cycle, you will understand what exactly the authority is looking at, what they are after. This is placement, integration, and layering. In placement, this dirty money integrates into the financial system. How? Through layering. They transfer the bank account of company X through wire transfer to an offshore bank, and that offshore bank loans company to Y, a fictitious company, and that fictitious company through a false invoice pays back to company X. The money goes back in the pocket of company X, and that company X invests that money through integration by purchasing luxury assets, financial investment, commercial industrial investment. Let me explain it to you. Mr. X is a dealer in selling illegal firearms and has a buyer who paid him in cash. Now, depositing huge cash would be difficult for him. So what he can do? He sets up a real estate company, opens a bank account, deposits a small amount of money so not to raise suspicion. This is called the placement. Now, then he transferred that money to different accounts in various jurisdictions with different names. This is called the layering. Then what he does is he trades into option from these accounts, from proceed, he buys property, integrating the money and making it legitimate. This is called the integration. Now you have heard of big scandals like real estate, where you buy a large house, shop or mall, but showing less value on paper, while actual market value of these purchased properties is much higher. This is done so that they can reduce their tax burden. Thus, black money is collected through tax evasion. Another example is shell companies. Recall yourself of Panama Papers. Most popular thing. What happened? These are fake companies. They exist on paper. There's no production. The launderer shows large transaction in these shell company balance sheets. He takes loan in the name of these companies, get tax exemption, doesn't file income tax return. Through these fake activities, he accumulates a lot of black money. They make financial records, false documents. Now, understand the working of shell company. When we will go to the gatekeepers who are required to file register on GoML, you need to understand this working. Now, how shell companies are working? They choose a tax haven, Switzerland, Cayman, any island. Then they create a corporation, entity, foundation, or trust. Then they hire you or anyone else to run your company affairs. Then they open a bank account in that region or another haven. Then they smuggle that money from one account to another, like through wiring or something, and then they spend the money. So what is anti-money laundering? Now, anti-money laundering is the act that seeks to deter criminals by making it harder for them to hide ill-gotten money. Now, which regulations apply to you in UAE? Federal Degree Law 20 of 2018 and its implementation Cabinet Decision 10 of 2019. And it is applicable to designated non-financial business professions called DNFBPS, who are required to get registered on GoML by 31st March, financial institutions and non-profit organizations. And the supervisory authority for DNFBPs are Ministry of Economy. Now remember, money laundering is a complex process. It involves several offshore companies and other actors. Recent scandals have shown that banks play a role in money laundering, but the corrupt also needs lawyers, accountants, real estate agents to hide and spend their dirty money. Without them, money laundering on large scale would be impossible. These are called the gatekeepers, designated non-financial business and professions. Who are these? There are 4 categories as per the law: broker and real estate agent, dealers of precious metals and gemstones, providers of corporate service and trust, lawyers, notaries, other independent legal professional, independent accountants. And law has enforced great responsibilities on these 4 categories to help combat money laundering. The first category, as per Article 1 of Section 3, is broker and real estate agents, when entering into operation in the interest of their clients for purchase and sale of real estate. These include developer, broker, and agent, dealer of precious metal and gemstones, when they perform any single cash transaction or several related transactions with a value of 55,000 dirham or more. It includes the producer, broker or agent, cutter, polisher, refiner, jeweler, or manufacturer. The third category is lawyer, notaries, and other independent legal professional, independent consultants, accountants, when preparing, conducting, or executing financial transactions for their customer in respect of the following activities. Now recall the structure of shell company. You will be understand what they are looking at: buying and selling real estate, money making that client, managing financial saving or stock accounts, establishing, operating, or managing companies or legal arrangements, buying and selling commercial entities. Recently, additional guidance has been given on the website that auditing, accounting, and tax consulting firms are also part of it, like chartered accountants, and tax specialists. The last category is corporate service and trust, performing or executing a transaction on behalf of the customer in the following activities: work as an agent in establishing companies. It should not be a fake or shell company. Working or preparing someone else to work as a director or company secretary or a partner in the company. Providing a registered office, business address, place of residence, address for correspondence, administrative address of a legal person or legal arrangement. Act as a trustee for a direct trust fund or to perform a similar function for another form of legal arrangement. Working or preparing another person to act as a shareholder for another person. Now, there is certain responsibilities as per law for these regulated entities. First, they need to get registered on GoML before 31st March. Appoint a compliance officer, it's called money laundering reporting officer. Identify and assess money laundering risk and terrorist financing risk. Establish, document, and update policies and procedure to mitigate the identified risk. Perform customer due diligence, identify and report suspicious transactions through GoML application. Put an adequate governance framework for AMLT and CFT. Maintain adequate financial records for 5 years. Now, how to prevent money laundering? These are the 5 pillars that if you are able to comply these 5 pillars, you will be able to prevent money laundering program through a money laundering program. Appoint a compliance officer. Written internal policy, procedures, and controls. Give ongoing training to employees for identification of these risks. Perform independent review. Do a customer due diligence. And if you fail to perform these 5 main categories, there is a penalty of 50,000 dirham. Now, first pillar is the MLRO, Money Laundering Officer, Anti-Money Laundering Officer, Compliance Officer, who oversees the firm's anti-money laundering, countering the financial of terrorism framework. Who should be an MLRO? The law says that the person should have competencies and knowledge, but it doesn't specify the particular qualification. But giving the legal implication of the role, your MLRO should be at least a director level employee with the knowledge, experience to be able to make decision. He should be able to have access to all files and all data. That's why he has to be a senior level person. So fifth pillar, now everything has been covered by Mr. Dalaram, so we will move to fifth pillar. So you will understand the consistency. Where is the consistency element? Customer due diligence is a process where you have to identify or verify the information of a customer or beneficial owner, whether a natural or legal person or a legal agreement, or nature of its activity and the purpose of the business relationship and ownership structure and control. Customer or beneficial owner. Now, FATF and UAE cabinet decision defines beneficial owner as is a natural person who ultimately owns or exercise effective control directly or indirectly over a customer or the natural person on whose behalf transaction is being conducted. It includes a natural person who exercise effective ultimate control over a legal person or legal arrangement. Now, identification of ultimate beneficial owner is the key preventive measure of the customer due diligence role, and it's the main crux of anti-money laundering. If you are able to identify your ultimate beneficial owner, you will be able to trace the transactions, accuracy and authenticity and transparency. Personify Sherlock Holmes. I wrote this article that time, people didn't understand that. Now, why? Because the UAE Cabinet Decision 58 of 2020 on ultimate beneficial ownership is a regime stem from anti-money laundering legislation, Federal Degree Law 2018, and its implementation regulation, which we are discussing. One of the biggest challenges in discerning whether money laundering is taking place or not is finding who is the ultimate beneficial owner. And it's a very complicated when there is a complicated company structure. So investigators frequently find ghost firms when they devolve into bankruptcy fraud, VAT fraud, or other malified practices. So as a compliance professional, you need to personify. You have to think like Sherlock Holmes. You are a Sherlock Holmes. Trace back all possible structures and transaction, how the company is working, who is the owner, who is the beneficial owner in those complicated and complex structures. Now, whom does the UBO regulation apply in UAE? The Cabinet Decision 58 of 2020 says that it is applicable to all companies in the offshore and free zone companies of the UAE, except government-owned ADGM, DIFC businesses, and companies listed on a stock exchange because they have their own legislations. Now, in case you are a legal entity, ultimate beneficial owner would a person who holds 25% of entity's capital or holds at least 25% of entity's voting rights at the AGM or stakeholders, or is the beneficiary of at least 25% of the entity's capital. Companies must keep, maintain, and furnish the following information to meet UBO disclosure and compliance requirements: partner or shareholder register, real beneficiary register, and register of nominee directors. Now, coming to the last regulation, that is economic substance regulation. It doesn't mean that it doesn't look for your UBO. There has been a modification in content of the ESR notification report, which requires that all licensee carrying out a relevant activity need to identify in their notification reports the jurisdiction in which the parent company, ultimate beneficial owner claims to be a tax resident. Now, on August 2020, Cabinet Minister of issued Resolution 57 and Ministerial Decision 100. And the purpose of regulation is to ensure that UAE entities report actual profit that they commensurate with the economic activity undertaken within the UAE, transparency and within the UAE. FTA is assigned to National Assessing Authority for monitoring compliance of ESR along with VAT. Now, the regulation apply to financial years commencing from 1st January 2019. Entities are required to submit an annual notification form to their relevant regulatory authorities and submit an economic substance report within 12 months from the end of their financial year. There are 9 categories, and it applies to onshore and free zone companies. These are called relevant activities. So you must be aware of these, and they need to perform an economic substance test for each financial year in which these licenses earns income from a relevant activity. It is not a one-time exercise. Every year you have to perform this demonstrated economic substance test. It will need to meet the economic substance test in relation to that activity. Activity might change every year, income might change every year. Now, this requires licensee to demonstrate that the licensee and the relevant activity are being directed and managed in the UAE. The relevant core income generating activities are being conducted in the UAE. The licensee has adequate people, premises, and expenditure in the UAE. Now, who must comply with ESR reporting obligation? Entity is not a, if you are not a licensee, no need to file notification, no need to do ESR test, no need to do a ESR report. But if you are an entity not carrying out any of 9 relevant activities, no need to do notification, ESR test, or ESR report. But if you are a licensee and you carried out a relevant activity but do not drive any relevant income, then you have to file only notification. If you are a licensee carrying out a relevant activity but you claimed exempt licensee, in that case also you have to file only notification. But you are a licensee carrying out a relevant activity and you drive relevant income, then you have to file notification, ESR test, and report ESR. And the filing deadlines is notification filing deadlines annually, and after 1 year reporting filing deadlines. This is the structure which has been issued by Ministry of Finance. Now, as I told you, the secret recipe of compliance of these 3 regulations is that ensure that information you provide to relevant regulatory authority is consistent, and under no circumstances it should be incorrect or inconsistent. You cannot file one information in anti-money laundering, one information in UBO, and another information in ESR. Incorrect or misleading information may lead to significant penalties being imposed by the authorities. And already authority has been imposing penalties on non-compliance of AML, like 11 banks have been penalized, 200 law firms license has been suspended, 3 stock exchange banks has been penalized, 950,000 dirham, 550,000 dirham, 1 government-owned entity CEO and the managing partners was sent to imprisonment 15 years. They have to pay 8 billion back to public. They have to pay 500,000 to the entity. And after that, the CEO who is an expatriate, he will be deported from UAE. So please be sure that you comply with all the regulations. Okay, thank you so much.
Thank you very much, Ms. Alia. Thank you very much. So far, Mr. Dalaram has covered all the banking side, how the compliance is achieved, and Ms. Alia has run through with the overview of all regulations, AML, ESR, and UBO. Now I will be switching to Ms. Eman, and she will be putting up some lights in law firms, how the compliance is achieved. And over to you, Ms. Eman. I'm going to share your slides.
Thank you, everybody. As Ms. Alia already mentioned, this requirements anti-money laundering policy, it's not only for the contrary to popular beliefs that only for financial institution, but also other institutions like for money laundering, but law firms and legal professionals are subject to money laundering regulation. The main reason for that is that law firm, one of the main targets for those who are going to launder money. Money laundering is a significant risk, and ignoring this fact has huge consequences. There are impacts of non-compliance with anti-money laundering and laws and regulations. The people involved and the techniques used in the cases of money laundering vary from case to case. Generally, large organized crime can involve more than one company, including law firms. Law firm money laundering can happen, and it has a risk. As such, it's become difficult for a regulator to detect these crimes. What is the reason why law firms are targets for money laundering and have money laundering risks, which I give as an example of this risk, and their consequences include the following factors. Large amount of money handled confidentially by law firms, ongoing cases where law firms have failed to manage risk, the damage caused by money laundering to the public, undermining public confidence in legal services, few reports on the detected risk, a failure of some law firms to recognize the risk they have, abuse of law firms' client account, some property. Excuse me for my presentation. Some property purchases, establishing and managing some companies and trusts, not defining and managing correct customer relationships. Abuse spot for money laundering through law firms. Money laundering uses system vulnerability to carry out the activities, thus aiming to prevent the transaction from being monitored and detected. For this, every sector that has money laundering risk should know its own deficit and drawbacks and prepare the anti-money laundering compliance program accordingly. According to some experts, law firms also have some weaknesses that money laundering can exploit. Example of these weaknesses includes a lack of due diligence. Money launderers prefer an intermediary business or contract method rather than directly transacting with institutions to hide the true source of funds from crimes. In addition, inadequate due diligence in law firms and the failure to check whether individuals who are client or firm have links to politically exposed person or organized crime are some of the weaknesses. In order to determine the real sources of funds in law firms, bank statements can be requested and past checks of the accounts can be made. Infiltration of law firms. According to the analysis made, it was observed that the criminals also placed someone suitable for their interest in the company for money laundering targets. Therefore, when recruiting law firm staff, it is necessary to make due diligence at appropriate level. When hiring staff, not making due diligence about the role can make the law firm more vulnerable to criminals in infiltration and exploitation. Lack of proper identity checks. As with other institutions, the process of authentication is vital for law firms. So identity control is among the other responsibilities of law firms to prevent money laundering. Failure to provide valid identification document could be perceived as a red flag for money laundering. While performing identity checks, the customer's identity is verified, and whether this person are a politically exposed person and whether they have previously committed such as financial crimes should be checked. If money launderers realize that these identity checks are loose in law firms, they can take advantage of this weakness and carry out their activities. Risk-based approach for law firms. Contrarily, all organizations at risk of money laundering, including law firms, must establish and comply with anti-money laundering compliance program. The most important component of anti-money laundering program is the risk-based approach. It proposes a risk-based approach for regulators such as FATF and the European Union to enable liable entities to combat financial crime effectively. This simplest definition of a risk-based approach is that the organizations perform anti-money laundering control according to the enterprise's risk perceptions and of the risk level of the customers. Legal and anti-money laundering requirements for law firms. There are some of the anti-money laundering regulations and requirements for anti-money laundering law firms to comply with. Regulated anti-money laundering law firms generally have to comply with the law under the Money Laundering Regulation 2007, the Proceeds of Crime Act 2002, and the Terrorism Act 2000. There are some of the obligations under these laws. For example, have a designated money laundering reporting officer for the institution. The person in charge of the institution are required to support suspicious activities, to report suspicious activities to the required authorities. Have a system for detecting suspicious activities in accordance with the Proceeds of Crime Act 2002 and the Terror Act 2000. Customer due diligence should be performed to verify customers' identity, beneficial owners, source of funds, and the nature of business transaction. Following the CDD procedures, the record must be kept within the specified period. Staff should be properly trained against money laundering risks and practices. Red flags for law firm. A major focus of anti-money laundering grids is a red flag. Red flag are warning signs of situation where money laundering may occur. FATF identified 42 red flags for law firms in its 2013 report of money laundering and the terrorist financing vulnerability of legal professionals. These red flags generally focus on due diligence, such as customer finding source and lawyers selection. After red flags are determined in law firms, some transactions take place in accordance with its legal and regulatory obligation. For example, requesting additional information from customer or other sources, cross-checking different information types, creating suspicious activity report for suspicious transaction, terminating customer relationships. Customer due diligence requirement in law firm. Customer due diligence requirement is also the control procedure applied when making a risk assessment for customers. Customer due diligence is one of the basis requirements of the risk-based anti-money laundering approach, and it has been deemed necessary and recommended by all regulators in the world within the scope of anti-money laundering activities. Customer due diligence measures require to really know your customers and know their activities. It is a background check process in accordance with the legislation. The implementation of customer due diligence procedures aim at law firms to identify their clients' risk and protect themselves from money laundering and terrorist financing.
Miss Evan, I have a question for you like that. Sorry to interrupt you during your presentation like that. You know that people, their clienteles are coming to you. They have cases and they have, they are opening offshore companies. That one. So, do your law firms also have, KYC and in place? Like, if I come to you like that, I want please can you do a case for me? So, do your law firms in UAE, they have their own KYC in place, like they are doing the background checks of the clientele or what?
Absolutely, exactly. This is a requirement as per the new amendments law 2018. It has been implemented for all law firms. We should have this checking customer due diligence requirements, and of course, absolutely, we check, and it's one of the way to prevent this anti-money laundering risks. Thank you for your question.
Yeah, then there is another question that do your firms, they have access to this World Check and other softwares in which you check that this the person is not PP or is not on coming on the international list of wanted people. So do you have softwares and other things in place, in your firms in UAE?
This is a difficult question because it's actually this PIP person, it's changing every time. It's difficult to check this really, and all law firms need it. And now, as I know, Mr. Awad, he is buying this, and I mean, he's now, because it's like, everything. I was thinking to complete with this, because I will reply to this question in my next slide.
Okay, sure. Go ahead, Lisa. Sorry.
All organizations at in risk money laundering.
No, because we were yeah. Please go ahead, because we were running short of time. So I thought that the question, because some people they have contacted, send me that this questions.
Action scan solution. Yes, this is about which we are talking about, and this is a necessary customer checks and identity checks are required in law firms. When checking customers, one should look at who they really are and whether they are personally exposed, politically exposed person, or whether they are on any other sanction list. Adverse media screening should also be performed for this customer. Sanction and politically exposed persons list are growing and changing day by day. This is what I'm telling about, that it's changing. It's difficult to check without really having some kind of specific technically designed for this aiming this kind of technically option. Due to this data dynamic nature, manual sanction, politically exposed person and adverse media data screening become very difficult and insecure. This is a sanctions counts. However, with this is a politically exposed person screening service. Law firms can meet global and local anti-money laundering obligation and be protected from legal penalties. And replying to your question, yes, we should have, but we implementing. I mean, on not only my law firms, because I'm in touch with other law firms, and this particularly this question was very concerning to us, and therefore, yes, we are implementing. We cannot say that this is ideal, because we are trying to make it ideal. We are checking by our own, but it depends on the nature of this politically exposed person, or
yes,
we don't have access to all this kind of information.
Yes, just to add on for your information, everything like that, the World Check, and there is other organizations now operating in UAE in which they have connections, and then you can hire their services, all the services in which you will come to know that whether your clientele, whether a person you are dealing with, and we also have access to that software, and that software has been updated continuously on a regular interval, in which they are showing the people who have sanctions, especially the individual people who are under sanction, that not to deal with them. And all the banks in UAE and all the major financial institutions, they have access to this softwares. Dalaram, just to interrupt you, sorry, just to answer this one, can you correct me if I'm wrong, Mr. Dalaram?
Yeah, Asaf, sorry, come back.
Yeah, so I'm saying that regarding this one, especially when we are going for GoML and other regulations, it is very difficult to ascertain the person we are dealing with and the organization we are dealing with. So World Checks and other softwares, they have indicated some, all the people who are being, list. Yes.
Yes. Yeah, those are integrated, and as I say, nowadays it's a digital banking, so a lot of softwares are available which integrate with World Check. If those are not integrated, World Check means it's a small organization and don't want to invest on an automated solution, then the World Check provides a manual access on the list. For example, a company maybe have 2-3 customers and new customers in a month. They can have a search manually on those lists. However, identifying suspicious transactions is not only on the from the sanction list, because sanction list gives you persons who has already been sanctioned, but anyone
But
who is
yeah, I understand that, so to avoid things like that, the third parties which are providing the compliance and everything, they have access to this list. Like we have just may sign an agreement to get this access list also, that for the people who have been, from time to time have been put on sanction list, the organizations which have been put to list. So once you have that one, whoever is doing your AML, GoAML, other things, they should aware of this list, just to, put on light on that. And please, Miss Salmon, carry on. Sorry to interrupt.
Actually, thank you so much. Very useful information for me. I definitely will provide with this information with in our law firms. I mean, owner of law firms, and I am done. Actually, this is a
Thank
only
you very
brief
much.
information. Thank you so much. And if you have any question, I'm open to reply. Thank you.
Thank you very much, Ms. Ayman, and thank all of you. Now we will head towards our question and answer sessions. Many of them we already answered by the panelists on the chat box and question answer box. So if somebody has any other further question, they can raise the hand. We will unmute them. Please.
I think Essen, there is a one open question,
Yes.
and I think a couple of attendants has asked that question, that whether we require to report all the transactions or only suspicious transactions. So as I mentioned, if there was to be report all the transactions, that would be too much, and then organization doesn't needs to follow all the AML process. The process needs to be followed because regulators want you to be a gatekeeper as a non-designated or designated persons in the financial institutions, and identify the transactions which are suspicious and only report those after a reasonable suspicion can be created, then only report to the regulators.
Okay.
Otherwise, it will be just throwing back the burden to the regulators, and regulators also don't have time to, review all of that. They can instead fine you to being not having appropriate procedures to identify suspicions.
Thank you very much. And one more question I would like to ask here. What do you think, what would be the competency of the compliance officer? Because many companies do not have a full-time compliance officer. How to mitigate and solve this risk as well? Because competency is the question again, and this is challenging for many businesses.
See, I have mentioned in my presentation as well, especially for financial institutions, interviews are being taken by the DFSA, ADGM, and Central Bank of UAE before making them compliance officer or AMLRO. They haven't specified any specific, qualification which I'd say, okay, you should be graduate in this or this, but there are a lot of courses are available in the market like ACAMS, and there is the ICA International. However, the organizations which may not be able to afford a full-time compliance officer, or organizations like, I think, Ahmed Akbari Chartered Accountant and others, we have outsourced compliance officers available, for example, few transactions, who can set up the policies, procedures, and provide them access for a software or do transaction monitoring for them.
Yeah.
But they need some experience and level of competency, which is, again, the judgmental. There is no specific requirement from any regulatory authority.
I will take one question here from Ms. Uma. One moment. Hi, Ms. Uma. Can you hear us?
Yes, I can hear you. You can hear me?
Yes, thank you.
Yeah, actually, I want to ask, because right now, which is I understand only 4 companies they can register in the GoML, and they are doing this one. But rather than the companies, what is the strategy for them? Because I think right now only these 4 fields they're taking, but after that they will take to everyone. So, like I am working in the clinic as a accountant. So, what is the strategy for me?
Alia, can you answer?
Yes, hi Uma. Well, the law, anti-money laundering law, it's a universal. It's not only applicable to UAE, and they have defined these categories as DNFBPs and financial institutions and non-profit organization. They are required to register, because the risk element has been identified in these sections. If another or other sectors are highlighted, maybe the financial task will highlight that they also need to get registered. But at the moment, others are not required to get registered.
Thank you, Ms. Alia.
Make the some
So,
strategies or not,
What strategies?
like against of this money laundering or something.
Yeah, if you are suspicious, you have suspicious that your company is doing some transactions which falls under money laundering, then you can go to your senior management, your compliance officer, and he can report to the authority.
Okay, thank you, Ms. Alia.
Aves, and I think Aves, Heather, you were raising the hand. Your question has been answered. Aves, are you there? Aves, I
You
think.
can hear me now.
Yeah. Aves, I think you raised hand. You have some question. Can you ask?
My question is already answered. Actually,
Okay, thanks a lot. Okay, thanks, sir. Thank you. Okay. That's fine. That is good work. Dalaram, you answered the question. Okay, this.
here we have Mr. Umair also.
Yeah,
Give
please.
the question. Mr. Umair, are you there?
Yes, and thank you so much for providing the opportunity to ask the question. By the way, Ms. Alia just responded to my question as well. Like it's not specifically mandatory for these four sectors, because my question is regarding the holiday homes or the leasing companies who's operating in the UAE. And because I didn't find out any article or any reference directly for them, like did they need to register for the GOMO or any of these type of sectors or things?
All right. Thank you very much. Thank you. Any further questions, please?
I think we the participant have answered all the questions and queries of the people, and after that, even somebody have any questions and query, they can write to us, and we will respond to that, and we will forward to the concerned specialist on this question. What are the matters on that one? And I thanks to my panelists, the speakers all, and moderator Hassan and Dalaram, Alia, and Miss Eman for giving their valuable feedback and their insight information about this GoML, ESR, and UBO. Now we see that UAE economy is moving towards a more structured economy, same like which is like in Europe and other part of the world, especially the European and other OECD and other FTA. They are putting special pressure on UAE economy to be documented same as which has been going on in other part of the world. So a part of that campaign, so UAE have been, introducing different laws and regulations. First, they introduced VAT, then they introduced ESR, then they introduced UBO. Now they have introduced AML. So it will be, and we predict that maybe in future there will be corporate taxations and other regulations be coming in place. So the companies who are working in this environment, before they have a liberty to do whatever they like there was company opening, whatever activities they have, they do transaction and other activities also. Maybe you have a, consultancy license, you are doing trading, you are doing so many other things. But now it's not possible to do transactions which is not mentioned in your licenses, first of all. What I see as a chartered accountant, when I have been here in this part of the world around now 22 years, I'm in UAE. I saw the transformation which has been taking place in UAE, especially is that now before you have too much liberties, the movement of money was very easy. There was too much cash transaction going on, especially in, this gold and gems, all the things. Now it's very almost difficult to do any transaction on cash basis. And after the introduction of these laws and regulation is VAT, ESR, UBO, and AML. So now you must to have professional people in place in your offices, in your companies, to handle these, laws and regulation, to fulfill the requirement of UE laws and regulation, and to answer the regulatory authorities. If you don't have, budget for the time being, or you don't have internal resources, you can outsource to any of the experts available in UE to handle these transactions. Otherwise, you will be falling in categories which are be penalized and penalties, and they have been heavily been fined. Even the banks and the financial institutions and other companies and the individuals, they have been heavily penalized and have paid fine because of non-compliance of these regulations. So my request to all the people who are doing businesses or they are going to start businesses, that before what they thought of Dubai, that whatever transaction they can do, whatever money they can move, is not the case now anymore. So you have to stick to the activities and your transaction, your each and every transaction is being now monitored by the Central Bank of UAE and your respective bank accounts. So I thanks all of you for the participant for attending this webinar, and I thanks to the speaker for the valuable time. Thank you very much, and Allah.